Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.
All right, Kitco favorite, Lobo Tiggre joining us now. Lobo, thanks again for making the time.
Always have time for Kitco.
I appreciate it. Exciting times. Let's start with your comments on CPI. I mean, obviously it's cooling. You called for a minor recession coming to the U.S. We're starting to see those cracks. Talk to me a little bit about this.
It's kind of funny. It's one of these be careful what you wish for scenarios where in some ways this is great. You know, Team Biden can say, look, we had deflation in June, right? But by the standards of mainstream economics, deflation is bad, right? The Fed's whole thing is we don't want no terrible deflation. That will be horrible. It means the economy is going down. Well, so by their metrics, this is in a way a red flag going up saying, hey, trouble, 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 warning. And so maybe it's not surprising that, we are recording on CPI day, but the last couple of days have been Powell day on Capitol Hill. Yeah. And, you've never seen a dove trying to sound so hawkish. Like what he's saying, and we're still talking rate cuts, we see some progress, all this stuff. It's pointing towards the rate cuts. It's, it's dovish, but he's still trying to sound tough, right? It's just, but at the end of the day, you can see the market reaction. Like they're not buying it. And then, so today happens, we don't just have a cooling of inflation, comes in cooler than expected. Mm-hmm. It's the sort of thing the market likes. And of course, Dow 40,000, right? Even Dow, not just NASDAQ.
Yeah, it's pretty wild. I mean, the pop watching it, obviously gold up at the $2,400 mark. A lot of excitement here. Talk to me a little bit about the room, what investors are saying, and what the sentiment's like.
So it's interesting that we're having this particular conversation right now, because one of the questions that was coming up was it priced in? Yeah. Like these rate cuts are so telegraphed that maybe that we're already flirting with 2,400 shows that it's already priced in. Mm-hmm. Well, today's price action shows you that no, it's not priced in. And this is actually a takeaway for the audience. Mm-hmm. You'll see a lot of things that are, like clearly written on the wall, and it's coming, it's signaled by the Fed or whoever it is. But the actual reality, there's always a chance it won't happen. And so there's an arbitrage. Mm-hmm. And that arbitrage closes when the reality happens. So sometimes even a print that's as expected causes a market movement. Now, in this case, it was better than expected if you're fighting inflation. And so we saw a pretty dramatic response immediately. And we to be expected, right? The moment that print dropped, I was thinking, Mr. Market's gonna like this. So I took a screenshot and I was posting my thing. And then as I'm typing it, I see, Market Watch, the futures goes like this. So I was able to do both at once. Yeah. But wait a minute, Lobo, if you're a gold bug, isn't deflation bad for gold? Gold's an inflation hedge, right? I knew you were going to ask me that.
What happened to the inversion?
Yeah, right. So we are, you could say, in an inverted economy, a through the looking glass economy, a Fed distorted economy. And so longer term, yes, gold is an inflation hedge. I mean, just look at a 50-year chart of gold versus the dollar since 1971 when they were freed to change. And it's a giant X shape. Like, there's really no question longer term. The devaluation of all these funny little pieces of paper we call money versus real money, there's no debate there. The problem is that people want gold to do what they think it should do today, right now, right? So gold tends to lead inflation. I think what we're seeing is a lot of people around the world, not just the Chinese, hedging against that inflation that's coming with gold. Because, okay, you say, we've got deflation and the Fed's going to cut. Well, why is it going to cut? Well, because it's responding to its other mandate. It's trying to prop up a weakening economy. And sorry for the long-winded answer, but this is the point, is bad news is good news. The Fed has trained, and the central banks of the world have trained investors that bad news is good news. And so what we're seeing from the mainstream perspective is another bit of bad news. Like, deflation is supposed to be bad. Yes, the voters are upset about inflation, but we don't want them to lose their jobs. So we're in that rock and the hard place coming together here. And people make a big fuss about this, but the reality is that the so-called core number that they are saying that they're guiding their decisions on hasn't budged. We're still over 3% on the core, 3.3, I think, on the core, which supposedly they make their decisions on. So people can talk, we're close enough. But if the Fed's cutting and inflation is still, their chosen metric is still above 3 plus, they're moving the goalpost. I think that's really significant, and I think that's really bullish for gold bulls.
Yeah, it's interesting. You know, I had Danielle DiMartino Booth on the show, and she was talking about how, pardon me, the Fed might have to get a little bit more aggressive here. If they start to see some of these numbers starting to cool, they might even go 150 basis points. What do you think the forecast is here in terms of, I mean, we have no crystal ball, we know
right,
that,
yeah,
but let's talk about the gold forecast though.
Right, so here's the thing, and gold bull likes gold. That's not much of a headline for you, I know, but this is an unusual circumstance. I'm still in team hard landing, sort of leaning towards what you're saying with Danielle DiMartino Booth. I don't think we just get the 25 basis points in September and then maybe another one in December that they're talking about. I think we're seeing real unfraying of the labor market, which has long been that pillar holding the consumer up, right, in the U.S. That is the support for U.S. exceptionalism. And it's not just the last, and since we spoke, we've had one or two labor prints. It's not just the last one that shows weakening in the labor market, but the one before. And the JOLTS numbers and never mind the household survey instead of the one that they quote all the time. Like, there is clear evidence of weakening in that one support for American exceptionalism in the economy. So I think the evidence is actually coming around to my view. And all those people saying if we don't have a recession by now, we're not having one, I think I'll be shown to be right about that by the end of this year. And I think it's starting now. As you and I sit here, I think it's starting. The data is showing it's starting. And this CPI print may fit that. But let's say I'm wrong. You know, Lobo, you're just a tinfoil hat wearing gold bug and, you know, it's always gold to the moon for you, right? Okay, let's say I'm wrong. Well, the mainstream is saying 1 or 2 cuts this year. The Fed is saying 1 or 2 cuts this year. And the market reaction we've got today, back over 2,400 in gold, is saying that's bullish for gold anyway. Mm-hmm. So, you know, I don't want to say that it's impossible for gold to go down. But if I'm right, if I'm wrong, it goes up. And if I'm right, it goes way up. And, I'll agree with Danielle DiMartino Booth on that one.
All right, I like it. Another call that you had, and we've been talking about the last two times that you've been on the show, is uranium. The past week, we've seen the equities starting to move up on the uranium space. Talk to me a little bit about this, what's moving it, and where are we going?
Well, this may be one of those cases where, we've had some aberrations since 2020 and all the COVID lockdowns, but historically, the stocks often move ahead of the metals. The stocks will lead the metals. I think this is a case where that's probably what we're seeing. We did get some news. The U.S. has approved their new subsidies and support programs, and it specifically is very pro-nuclear, the small modular reactors, the micro reactors, the advanced nuclear. The U.S. is really, whether they should or they shouldn't because of climate change scare and all that stuff, the fact is they are. And this is a very bullish thing, I think, actually for humanity, to have a sane 24/7, 365 baseload form of power that's cheap and reliable and clean. I think that's a great thing. But it's also, for resource speculators, a fantastic thing. I wish we'd had this interview a couple of days before, because I was saying, as close as I get to pounding the table, I was saying, look, I love uranium this year and right now because people are bored. It's not doing anything. Uranium has gone sideways. It's corrected, which I called, right? It's consolidated. It's been going sideways. I think the next big move is up, and we're expecting news. This subsidies from the U.S. is one. The other thing is Kazatomprom, and I don't normally pick on one company, right? You know that. Yeah. But in this case, we're talking about the world's largest and lowest cost producer. So if prices are determined at the margin, economics 101, this is your marginal producer. This is the one that can send prices lower by selling lower, because they can, right? So there's been, they haven't put out a press release, but there are reports that they're starting to say, well, 2025 is not going to be so easy either. We'll see when that shoe actually drops. But, I'm not one for rumor mongering. I don't want to confirm the rumor. I'm just saying this is out there. There's also this confirmation of subsidies from the U.S., and we saw the stocks move significantly yesterday. And interesting thing is uranium spot, which has been just sort of going sideways, it popped up 50 cents, which isn't a big move. Directionally, it was right. But that's why I'm saying it's leading. Therefore, I see this as an opportunity. Sorry, just real quick. Yeah. Anybody who missed the big run up last year in uranium, it's like kicking themselves, I missed that. While we're still in the phase of relative boredom, if uranium hadn't done anything for months, I think there's opportunity there, and you should pay attention to it.
Interesting. Okay, when you're looking at assets and running due diligence on companies, investment opportunities here, we don't have to get into specific names because I know you're not going to give me any, but Are there locations of assets and regions that you think will maybe outperform?
Yeah. I was asked this on stage here at the Rule Conference, and my answer was Argentina. I think, I don't want to sound melodramatic, but Milei's program, whether you agree with it or not, is so radical, so extreme, and so hostile to just about every interest in the country and even internationally. I thought there was a good chance that, he would be assassinated. The moment he started to actually try to do what he said he would do, he could be assassinated, and he hasn't been. And now his reforms have started to have an impact. Like he's slayed an apparently invulnerable inflation beast down there, which is amazing. And so he now has popular support that I think affords him some protection. The significance of this for us as resource investors is he's still only half a year in, right? So he's got years to go. And that's long enough if you've got a discovery that can be, measured up to a 43101 compliant resource and put out a PEA or something on there. These kind of value-adding catalysts, that can happen within his presidency. Or if you've got a developer that could go into production, that sort of thing. If you've got maybe early stage and we haven't made a discovery yet, I don't know. But if you've got something in hand and you've got work that can add value for shareholders, in this jurisdiction now, where you're coming off a discount, you've got a tailwind. So I like that a lot. And maybe going the opposite direction, there's a big scare in the Yukon now, and that has a lot of Yukon plays on sale, and I think that's overdone. It's ridiculous. I mean, Yukon basically has nothing else except tourism. It's not going to become an anti-mining province. Yes, there will be a response, there will be new measures, there will be new regulations perhaps, we'll address the issue.
So you mean pick up some of those, M&A targets are actively...
Yeah, I don't talk single companies usually. I would not buy the source of the trouble in the Yukon right now, because there's still a bill to pay. But everything else that's been sold off, like guilt by association, is wrong, right? And if it was the end of mining in the Yukon, okay, fine, get out of all the Yukon. No crystal ball, but I cannot see this accident being the end of mining in the Yukon. Therefore, the companies that are oversold, smeared by association, I see that as an opportunity. So 2 jurisdictions for you.
Interesting. I mean, you were in the Yukon and you were talking to a lot of different companies over there. Despite what happened with Victoria, are you thinking, guilty by association? What are those conversations? Is it more of a damn?
Well, of course, nobody wants to, speak ill of the dead. No, not dead yet. I'm not dead yet. Sorry, Monty Python can't help but come out from time to time. Everybody wants to be polite. And honestly, when I was there, it was premature. We didn't know the extent of the damage yet. And when we flew over, we saw the extent of the damage. But to the upside, most of the tailings pond was contained. It's between these 2 mountain ridges, and they pinch at the bottom. So despite the dam failure, relatively, it was a small amount of material that moves. That was actually, I think, a good design. To me, it's a testament to doing things right. Now, I don't know what went wrong. Something went wrong. But putting that tailings facility in that valley was a smart move, and it worked. But where I'm going with this is downhill from that, there's an event pond. Downhill from that, there's another pond, a lined pond that plugs up the valley, and it's intact. So I was actually fairly optimistic that whatever harm there might be from that, it could be contained on site. There are reports of some cyanide outside the site. I haven't seen confirmation of that. But I think it will actually be minor. Here's a forward-looking statement for you.
Okay, let's do it.
I think that this thing, it's not nothing, and it's serious, and I understand the First Nations have every right to be upset about it. I have no qualm with that at all. But I think the design itself was good, even if the implementation was flawed. I think the actual accident damage will be relatively minor. It will be clean-upable, if you will. And I think the players will do the right things, address this, and I think the industry learns from it and gets up and keeps going. And I think the Yukon government and the people of the Yukon will support that. There's a lot of jobs at stake, but it's not just that. They have mining in their blood, if you will.
Yeah, well, it's not new. It's not a new region to mining, and of course, we need these, minerals and everything else from the ground.
The critical minerals angle is part of this now. Right?
Talk to me a little bit more about that critical mineral angle.
Well, okay, so here I am raining on the parade again. I don't want to buy anything because it's a critical minerals thing, but as as an optional tailwind, I see that as great. So, do I want to, pile into XYZ critical mineral because California's banning, internal combustion engines in 6 years? Well, no, they're already backpedaling on that, like most countries around the world, and the producers, the car makers, was it Mercedes and some of these others that said, oh yeah, we're going all electric by 2030. They're like, well, maybe 2035, 2040, right? These unrealistic goals are being backpedaled. So if your whole thesis is, oh, I'm buying nickel because we need it for NCM batteries, and that goes into reverse, you've got a problem. Right. If you're buying nickel or copper because they're, central industrial metals, and the world is going forward, the population is growing, and we're going to need them regardless, and they have an electric car tailwind, that's fine. The electric car tailwind helps you out, and if it goes away, you're still okay. And by the way, I'm not recommending nickel and copper, I'm just giving them as an example. To make something close to a recommendation, I'm not ready to buy any industrial minerals until I'm sure the recession has done its worst. We've talked about this before. Right now, for me, it's gold, silver, and uranium, because uranium is recession resistant at the very least. Everything else, I'm waiting to be sure that the recession has done its worst, or that I've been proven wrong about that, which will be this year one way or the other. So when that time comes, sorry, it's not nickel, because the Asians have figured out how to supply nickel from non-class 1 nickel sources, and they're flooding the market, and we need to see whether or not that rebalances. Lithium is a maybe. High prices cure high prices. Lithium's not rare. Even with the low prices, there are still new projects coming online. So lithium's a maybe, not a no, it's a maybe. We'll see how the market balance is, because we're still building the EVs and stuff. So there still is a lithium story. But the no-brainers for me are oil and copper. I'm not going to wait to see how the market shakes out or whatever. As soon as I'm confident that the recession has done its worst, or that I've just missed it, there was no recession, this time was different.
Right. Which we'll call you out for.
Right. Either way, oil and copper stocks, that will still be on sale at that point. The carnage will still be, people reeling. That's what I'm looking for as a buying opportunity.
Interesting. And lots of people looking at uranium as well. Lobo Tiggre, always a pleasure to have you on. Thank you for joining us.
Thank you, Jeremy.
I'm Jeremy Szafron for all of us here at Kitco News. Thank you again for joining us here in Boca Raton at the Rick Rule Symposium. Lots of great content to come. Stay tuned.
Kitco News special coverage of the Rule Symposium, Natural Resource Investing, is brought to you by G Mining Ventures.